Hello, welcome to the European Open briefing for Thursday, June the 14th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The main headlines this morning: the US dollar briefly surged higher following the Fed decision to raise interest rates, but those gains were short-lived. The euro is firmer as attention shifts to the European Central Bank's own policy decision coming up later today. The pound is also higher following the votes in UK Parliament yesterday, where Theresa May managed to defeat the proposed amendments to the Brexit bill. But the Australian dollar is weaker this morning following a poor batch of economic data out of Australia and China. So let's get started now by taking a closer look at the US dollar. We can see dollar yen yesterday surging to a 3-week high of 110.84. It has though retreated to around 110 at the moment. The dollar index also surged higher, reaching a 1-week high of just above the 94 level. The Fed, as expected, raised interest rates by 0.25 percentage point. They also raised their expected number of rate hikes for 2018, the total number of rate hikes from 3 to 4. And there was a change in the guidance as well in the Fed statement, where they dropped the pledge to keep interest rates low for some time. Despite that, though, we saw the dollar retreating rather quickly. So that came as investors scrutinized the details of the statement and projections. In fact, there was only one additional FOMC member changing their stance to raise interest rates 4 times this year. So that's not a really big shift in terms of how much more hawkish the Fed has become now. On top of that, we do have trade risks re-emerging this morning. It's being reported that President Trump is considering whether or not to activate the previously announced tariffs of up to $50 billion on Chinese goods. That decision could come today or tomorrow. If President Trump does go ahead and impose those tariffs, we could see an escalation of tensions, trade tensions with China. So that is weighing on risk sentiment this morning, and we're seeing a broader, stronger yen. But we will also have some economic data as well out of the US. We've got retail sales coming up later in the US session. Let's now turn to the euro. We can see that the single currency has been moving pretty much sideways for the past week. It is now climbing back towards last week's 3-week high, 1.1840 against the US dollar. Is currently trading just above the 1.18 level. We do have the ECB decision coming up later today. So we saw a bit of a rally in the euro last week on the expectations that the ECB will announce an end date to its QE program. However, investors are being more cautious now. The ECB may avoid committing to an end date, especially given more weak data releases this week. We saw a poor German's EU economic sentiment index. So it's unclear how much detail the ECB will provide today. So despite the euro moving higher, overall markets are fairly cautious. Let's now turn to sterling, because although we did have some positive developments on the political front, we're seeing the cable rate currently just below the 1.34 level. It briefly touched 1.3410. If you look at the broader trend, we're seeing sterling drifting lower over the past week. So Theresa May survived 2 days of votes in the House of Commons, where MPs voted down amendments made by the House of Lords to make some significant changes to the EU withdrawal bill, one of which was whether or not the UK should stay in a single market. However, Theresa May did have to make a compromise on one of the amendments that would have given MPs more power to have a final say on any final deal with the EU. So that does now pretty much rule out a no-deal Brexit. So that is also providing some support to the pound, although we're seeing expectations of a Bank of England rate hike in August sharply receding. We had a series of poor data out of the UK this week, including manufacturing output, weaker than expected inflation and wage growth. We've got retail sales coming up very shortly. If those retail sales numbers also disappoint, we would likely see those August rate hike expectations drop even further. Let's now turn to the Australian dollar. We can see that the Aussie has pulled lower from last week's 6-week high of 0.76 against the US dollar. It's currently trading around 0.7550. We had the employment report showing a drop in the unemployment rate in Australia from 5.6 to 5.4%, although that drop was mainly due to people leaving the labour force, and in fact the number of jobs being created rose by less than expected. We also had poor data out of China. We saw industrial output, urban investment and retail sales, all of them falling well short of expectations in May, pointing to a slowdown in the Chinese economy in the second quarter. And those fears of a slowdown were further exacerbated after China's central bank surprised the markets by not following the Fed in raising its own short-term interest rates. So in previous Fed rate hikes, we saw the People's Bank of China following suit and raising short-term rates. We didn't get that this time around, which means that perhaps Chinese authorities are worried about a slowing economy. We're seeing the Aussie being weighed by those developments. And before we go, let's take a quick look at today's economic calendar. We do have the ECB decision coming up at 11:45 GMT, followed by press conference with Mario Draghi at 12:30 GMT. And then later in the US session, focus will be on the retail sales data. That's it from me. Thank you very much for watching and have a great day.